is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Apologize for yesterday. Was on the road in a place in South Carolina called Newberry. It's a little west of Columbia. Great rolling hills of middle of the state, South Carolina. If you've never been there, check it out. Quite a few cattle farms, rolling hills, hay fields. Just a beautiful place down there. Kind of there between Columbia and Greenville. It's God's country. On the road still in the mountains of North Carolina right now, up in Blowing Rock, North Carolina. If you've ever been here, you know how cool this place is. Nice little village of a town, and happy to be here. It's nice and brisk this morning. It's in the 40s, and the wind's blowing, and you can hear it outside. And it's kind of cool relative to the 90-degree heat in the part of the state I'm usually at. So I'm going to be on the road this week, but going to be in a better situation tomorrow, and have some decent views, hopefully, for the show as a backdrop. So looking forward to showing you guys the mountain ranges up here at these elevations. Let's take a look at the S&Ps here. And I'm not going to be able to look at the den except on the breaks. I've kind of got a real estate issue here when it comes to showing charts today and looking at the den. So I'll look at the comments on the breaks today. Taking a look at the S&Ps, you know, Yellen obviously did some favors here. As you guys know, she pulled out the doves out of her little magician's sleeve there, and 2103.75. Looked at that as a little bit of a chance to trade against. Came down to that 2083 right off of that unfair high on the daily. I'm going to kind of walk you through this here. We had the weekly close above. We kind of hit that 2103 area, the 2106. Actually, to be exact, and then we came down into that 2083 unfair high. So we closed above on the weekly, came back and retested, and now we're just drifting higher. Not a good situation that we talked about. Once we had that weekly close above 2083, and our breadth calculations were, sympathetic with this move. Not a lot of cracks in the armor there. We talked about the shorts. It was kind of okay to be long, not okay to be short, and that's really the way the ball bounces here. It doesn't have to make sense, guys. I mean, fundamentally, whatever you're thinking, technically, it is what it is. So, always remember that. I mean, there's a lot of people trying to outthink these things, and those are usually the people that get hurt playing this scene. So let's take a look at the NASDAQ. We're taking a look at, let's see here. Let me make sure of something here in the den. Guys, sit tight. All right, here we go again. As we look at the NASDAQ, even crossed the borders at 4508. Let me make sure. Okay, I'm trying to balance a zillion things to show the screen here. Show my charts on one screen here. Okay, so 4508. Again, we crossed that border. We kind of came back and retested on the NASDAQ. You got a little bit more congestion up here at 4538, but I think the broad market, the S&Ps, you just don't really have, you're kind of up in the ether up here, and you don't have anything to hang on to as far as playing defense one way or the other. So this thing could really drift around kind of aimlessly up here, and obviously the leverage is towards the long side at this stage, and we've been talking about that ever since we had the weekly close above 83 on the S&P. So keep that in mind. Let's take a look at the Shanghai. Really nothing completely spectacular here going on. Again, the disengagement from all that's going on over in China. I think any type of rallies in China are just going to fuel what's going on with the S&Ps right now. So keep your eye on that. Whenever that happens, it's probably going to just be a leg up indicator on the S&Ps. Here's the 10-year. We talk pretty religiously about these higher lows on the long term, playing defense against 129.02 for the long term trade to ultimately get back up into 131, 132. Still feel like we could head higher now, and obviously the rhetoric from Yellen's not going to hurt that. But it kind of gave you a leading indicator that was a little bit of an anomaly or a divergence in place relative to the fundamental rhetoric. And back in right in here where we had the possibility of a rate hike coming out of some folks' mouth at the Fed, and kind of holding its ground, being able to edge higher. We talked about this being the easier trade instead of trying to short the S&Ps. This one kind of showing itself early, and that was the way that works. Let's take a look at gold. This has been one, excuse me. That move up, without question, 2 days ago was super powerful. But on Friday, we're looking at 1234.20 as support on this right now. This is a daily profile that has appeared below price action, and sometimes these act as magnets. They're very bullish situations, normally speaking, and 1234.20 is going to be support on that, and that kind of coincides with the POC on the weekly here. So you've got 1230 and a half, 1234. You've got a little bit of a dig-in area, in my opinion, on a POC and the top of a profile on the daily, which is appeared below price action. That's all bullish. So you're looking to buy support and buy breakouts on gold here. Didn't quite get down to 1193. We hit that 1200. Oh my God, my chart's messing up again here. We got to the 1200 psychological number there. I was thinking we were going to pierce through a little bit more. I missed a lot of that rally myself, but again, now that it's shown itself, buying support, buying breakouts is more than likely in order on gold. Let me check my time here. Okay. And here we go. All right, so let's just keep hitting the usual suspects here. Man, November beans. John from Philadelphia, I hope you are ringing the register on this one, my friend. This is, this has been support, breakout, block out the short side. There's zero reasons to short this thing. We had, and here's the long-term weekly on the Novi beans. Again, these are the types of things you might have, gotten, and I'm going to stop flipping around so quickly here. You might have gotten stopped out for a little while in the regulation of the trade up. You've had some chances to take some off using this kind of train of thought, but then the breakout again above 1063, you got to be looking at this from the long side. And the targets, who knows where the targets are right now? The weekly is really just kind of continuing to build energy. I know this thing's gone a long ways in a short amount of time, folks, but there's really no signs to allow the regulation of this trade up to be broken. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, sorry about that. Let me make sure let me repost the chart here, guys. We had a little bit of a connection issue. Let me make sure we get our chart back on the right screen. And gotta love doing the show on the road here. All right, so we're gonna take a look at currencies. We hit quite a few usual suspects over on the futures side. So let's take a look at the euro. And first, before we get into that, I just want to get back to the dollar really quick. God, man, had one of the biggest moves I'd seen in the dollar in a long time the other day. And one day, this is a weekly chart, but this, as you guys know, happened in one day. We actually closed below this 94.13 area. Had to close at 94.02. That wasn't really, past the noise level of it, but went back and kind of, when you have these types of moves, excuse me, you want to see. You want to see these things get away from these inflection points when they come down into them, and we talk about that all the time. And now you're noticing this particular price action not really wanting to get away from this weekly unfair low or even pierce back above. So this consolidation that started here on the weekly, and this is the daily. It's not exactly a reversal type scenario. It can reverse, but generally speaking, I'd say statistically speaking, probability wise, this is the type of technical action where there's not a lot of buyers down here. People are just kind of adjusting positions for another leg down. So you got to look at the dollar that way. And that being said, man, I keep messing my charts up here. That being said, we're going to look at the euro finally. And as we look at this, this big number in the past, 114. Let me see if I can get this spread. Okay, 114, 64, 65. I'm a little shocked we're actually not up there already. So as you look at this, we're trading about 125 pips below that area. I think that's a foregone conclusion for us to reach 114.64, 65, considering that inverse relationship to the dollar to some degree. I think what are we, like 35% at this state that the dollar is comprised of the euro, maybe a little more. But as we look at that, this is the type of daily action you want to see. How do you trade this? I mean, where do you play defense? That's always what we're concerned about first. Believe it or not, I think you got to look at playing defense below 112.80. So let's just kind of take a step back and look at the risk reward on that. So you're risking 80 points here to make another, 125 maybe, 125 pips. Not the best risk reward scenario, and you've actually got to give yourself room below 112.80. So my idea here is to actually go into the 240s, and this is all in the scanner. Excuse me, folks. This is all in the scanner. And as we look at this 240 unfair low that we've kind of already used as a little bit of a short-term support, 113. Let me make sure. Why did we? Let me see if we can get our currency server back up. Are you guys seeing this? Al, are we good? Okay, good. I don't know what happened there. 113.32 support on the 240. So, I'd like to play defense below there, kind of tighten it up and look at a much better risk reward scenario of getting stopped out, based on my appetite for risk, maybe slightly, maybe slightly into the 113.05, 08, somewhere in there. That's giving a very generous stop. But your target's above ultimately going to be that 114.65. And then you're looking at a really good risk reward scenario, in my opinion. Let's take a look at the Brexit situation. Seemingly nobody cares. So we're looking at 140, with a little bit of noise. I'm not trading this personally. I think this is too news driven. I think you could have a wacky move one way or the other as a relief rally, or, the world's going to heck in a handbasket. 114.44.45, long-term support on this. Taking a look at the dollar situation, I think, we've obviously reached some highs already today, 146.79, but I think we can actually go much higher. I think the U.S. dollar obviously showing that consolidation, spinning around below those weekly or around those weekly unfair lows is a big deal. A lot of the other currencies are looking at that. And we look at the Australian dollar. This was one we talked about, this big number down here, to try it again after we kind of took a break from it, breaking below 74.81. Try it again, meaning pick some lows down here, try to find some support to try to get a trading bounce up into 74.81. We reached a high of 74.53.54. So we've almost gotten there. I think we could go a little bit higher, actually. The Australian government's keeping their powder dry as far as, the rate, race to zero situation, as you guys all know about, that we taught everyone how to do. So we get what we want there. Looking at the yen. All right, so again, this is one where, buying it higher is not necessarily a bad thing in this case. And we wanted that weekly confirmation. We wanted to kind of get some daily closes at least above 110.40. We started picking on this at 105.5. That's 500 pips. Got to be happy with that. I like the way it was kind of compressing up into it. But, this situation with the dollar is not boding well for this particular currency. It's in no man's land down here. I think we had a great run. I think I was, waiting for another close above 110.40 myself. It didn't happen, and I don't want to go short this product. The Bank of Japan could step into this thing at any moment and cause havoc. I'd rather be long, put a gun to my head, be long, look for support. And let me check the time. All right. Okay, so as we look at the yen, we've covered the yen, we've covered the Aussie dollar, British pound. euro. Let's take a look at this little gem. Canadian dollar, kind of oil related, primarily oil related. We're kind of devaluing as gold and the rate structure situation started happening. Markets started going up. Gold kind of fed on that. Canadian dollar becoming a little bit more valued. Let's take a look at the crude oil situation when we come back, folks. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Man, isn't the internet great? I'm talking to a guy in Japan, my friend in South Africa, Steve Banger over in Europe. I mean, kind of cool. All right, taking a look at the crude oil situation, and you know, the dollar caving in, the Yellen comments. It didn't help this short situation. We had a lot of what I thought leading indicators to kind of keep this away from 50. and have some breakdowns to 46. That obviously hasn't happened. I got stopped out of this trade personally. I was actually pretty convicted about it. So that's what stops are for. Trading, MOs can and need to change sometimes. So as we're looking at this right now, I can't bring myself to go long this product. I can't bring myself to go long with stops below 49. I've got to wait and kind of see what the dollar's going to do on this. I mean, you don't have to be in every market all the time. This is one where I personally took the medicine, and I was thinking we could have a retracement down into the bottom of this profile 46. And why was that? I mean, that was a little bit more of a cowboyish mood, but a lot of times these fair auctions are completely explored at some point. This one hadn't been touched. Had the Canadian dollar kind of doing its thing. The dollar, there's a lot of things that we were looking at. The XLE for this, I'm going to go back to the XLE. Let's just see how this little scene has developed. And still not making higher highs here. Just thought that there wasn't a lot of confidence in a consolidated manner when it comes to a lot of the oil-related underlying instruments saying, hey, wow, oil's going higher. We're going to break out again. We're going above 50. And, nobody really seemed to care to the large degree. But if you're looking at this, and we always do this, and I'm sorry to touch on this again if it's boring you. We go into this section, we look at these, we look at these sectors. I mean, right now on the big 9 ETFs, you see a sea of green. And, you look at, and we're going to look at the utilities because, that's my favorite sector. The XLE energy sector, I mean, you do have, at bare minimum, quite a few balanced areas going on in green. I mean, this is, and when I say balanced areas, I mean arrow up in the balanced areas for the most part. You've had some really good long opportunities in here. If you were kind of looking to buy the strong and sell the weak, I'm a huge fan of that. But you can find some weak opportunities in here. You can look at basically, if I want to look at some of the neutral, look at the weekly kind of arrows down. We might have some opportunities here. Chesapeake Energy. Let's just take a look at this one. This one's obviously rallied decently lately. Kind of a story stock here. With thought we were kind of hovering on the cliff down here. Still think that's the case. Not a big fan of shorting a $5 stock though. As you can see, not a lot of other arrows down. We've just kind of been, just like we talked about with the XLE, not exactly making new breakouts on quite a few stocks, but not breaking down either. So how do you trade this? How do you use this information? Let's just kind of drill down after I reset this. And let's take a look at, let's see what is possibly Murphy oil. All right, so this is the daily, this is the weekly. We talked about Murphy oil as a long candidate as it was coming down into this 28.58. And I want you to see how these inflection points act. We've got the breakout, we've got the profile below, and then we kind of get into that top being reflected in the Murphy oil right in that weekly. And if you want to see things that are kind of sitting on that top area, you can always pull these up. These are dynamically updated. These are going to kind of put them on your radar screen immediately when they happen. If you're looking for short-term or long-term trading opportunities, right now you've got not a similar situation, but you've got a possible breakout situation going on in Diamond Offshore right now. I just pulled that up, for example, showing top above one. But and let's look at EOG Resources here really quick. Yeah, this is not the best long. But again, just showing you that you can find certain setups too. Like so if I wanted to find stocks that are trading above and hitting the top, so these are the two that are clean and cleared, like Schlumberger. Let's take a look at this one. So we have obviously had a move up, kind of getting back above 76.65 this week. Here's the daily. We're getting into a top. So I'm looking at this as what there's some resistance here. If I can clear this, I'm definitely going to have a lot better, situation to trade this from the long side. But right now, I think you've got better longs in the XLE. I was just kind of clicking buttons over here to show you could find setups. But you can find different. My favorite setup really in a situation like this, and there's there's really not a lot of weak stocks in here. There's one thing here, Valero Energy, that's, we talked about this one, just not exactly. Let me go back to the weekly here. Well, okay. This is one to be blocked off your long candidate side. I mean, this is just, this thing's down here for a reason. We've talked about this continuing to trail down, putting stops above 55.71 and just kind of letting it continue to fall apart. There's really not a lot of other stocks in that scenario in the XLE sector. They're not getting super excited by crude oil continuing to ramp up here, but I don't really see, just looking at cell structures here, let's just take a look at FMC Technologies. This one even found support on 26.63. Let's go back to SWN really quick in this sector. And this thing's off to the races again. And it's above 15 now. So one of the cool things about the SWN is, we had pulled back. We had the price action appear below, profile, long-term profile appear below price action. That's bullish. Just like we looked at, God, what was the thing we looked at earlier? I think it was on the currencies. Oh, gold. No, we looked at gold earlier, and we had that profile on the daily appear. It was 1234, and then we had that POC on the weekly at 1230. Very bullish setup on gold. We can get down into that DMZ. That's like collect gold area, stops below 1230. This one appeared pretty far below price action. This is extremely bullish when that happens. And then you look towards, how do we start looking to buy this thing, the collection area? Here's the dailies. And again, we're just, looking to how do we play defense? And this thing has just outperformed significantly. I mean, this is one you just completely block off your short list. Valero was one we looked at a couple of minutes ago. You block off the long list. So you got some okay to be long, not okay to be short situations here still. And the 240s, man, we're just way, way past here. So we need to kind of find support again on this. And you need to wait a little bit on SWN, even though it's gone through the moon. Let's take a look at ExxonMobil. Let's look at the cell structure here. This one's a little concerning to me. You see all these yellow peelbacks happening here. We've got a situation. Let me see if we got any pre-market prints. Not really. This is a situation not exactly making new highs with oil, to say the least, but it's just kind of languished here. And lo and behold, we've got a weekly profile with the target down below 86, 87. And you've got to play defense above 90, 46 on this one. But decent little risk reward. I like it for a pullback. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software
software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Let's take a look at ExxonMobil. And on this server, I just gotta let you know that the one I'm showing you on the futures, we have real-time quotes on different servers, and that's consolidated in the scanner, which is, in my opinion, a very cool scene. So this one's actually 15 minutes behind on looking at this particular stock. So I don't know what exactly the correct print this morning. It's in the neighborhood of 89.5. So as we look at this, this is the weekly. We talked about, this in the scanner, 90.46, 86.87. So in my opinion, you've got a decent little risk reward if you're looking to, find a stock that's not exactly cooperating lately. This one may deserve a pullback, but again, fighting the tape right now on the crude oil situation relative to the dollar and what the dollar may do, fall apart even farther, and then crude having to reprice itself to crappier dollars. No way else to say that, I guess. Being on, being in a short crude stock situation is probably not the best thing, and you've got way better shorts than this. But again, we could have, if you're looking to play around with fire, we could get down in 86, 87 on the weekly on fair lows. But takes a lot to move ExxonMobil. God, did I leave myself an out there about a million different ways or what? XLF financials. Let's see how these guys are liking the new rhetoric. This is not the sector to be in, long or short, in my opinion. Put a gun to my head, I got to be short these things. But, the market's probably going to drift higher based on that 2083 weekly close that we had. I mean, a nuclear explosion somewhere could obviously derail this concept, but I don't know if that's the probability that happens pretty low, and the world is looking to us to rig our economy, and that's in force. So that's what's happening here. The XLF, again, I think you got better longs out there. Let's look around at the FANG really quick. See, Amazon talked about not being short this thing. This is nothing to play around with. The stock's been going straight up and outperforming the market for a reason, and consolidating right above this 722, this 722.45. We talked about waiting for it to get it back above there again, or find support as it did around 695 before. Obviously breaking out. Nobody wants to sell this thing, and anybody who's shorting it is having to cover constantly. These guys are going to rule the world, seemingly, and not make any money while doing it. That's not fair. The whole thing's not fair. Netflix got above 96.18. Talked about waiting for a pullback on this one. Hasn't quite done that yet, but I like the consolidation on it. Let's take a look at Apple. And guys, when I only have one screen, I've said this at the beginning of the show, it's very difficult to try to visually get things like I do at my desk. So I apologize for that. Apple, let's just see where we're at. Looks like we're trading 99 pre-market on this. So trading a little bit above these weekly unfair highs. I'm still not exactly excited about this thing. 98.64. We talked about that weekly close that happened 2 weeks ago. And again, this is our weekly chart, and this thing consolidating around here. I'm not exactly excited about being long this stock, and obviously had a decent pullback yesterday. Well, some volatility yesterday, excuse me. So what do you do with it? I mean, obviously you can find inflection points here that's using as support, but I think, I think the market's just kind of lift higher. Rising tides could lift all boats. That's the scenario here, but I think you got better long situations. I think this stock is ultimately poised to head south. But again, you don't want to fight the tape of the market right now. But if you look at Apple, this is not a pretty scenario. I mean, if you kind of step back and get away from the noise for a second, 98.64 is going to be ultimately, where you can orient stops around this thing. But again, I think you got to wait a little bit here. This consolidation here around these weekly unfair highs, you never want to see that if you're trying to get short, and you never want to see the market in a state that it's in right now. Let's take a look at the technology sector while we're talking about Apple. And again, we're just kind of focusing on technicals here. This is the XLK. Got a little ways to go here. I mean, could Apple lead this? Could this lead Apple? Who knows? That's why we're looking at it real quick. I think we could easily get above 44.25, 44.73 on this, but that's the next stop up on the XLK sector. Let's look at the XLV, this healthcare sector, and we're going to go back to the scanner for a little bit here in a second to look at some stocks within the healthcare. Daggone it. Here we go. All right, so we had the close above, had the retest 2 weeks ago. What do you do with this now? And here's the daily. I tell you what, you don't short it. There's nothing to lean against. There's nothing to play defense. Let's take a look at the healthcare sector in the scanner here. Let's go back to the ETFs. And where are we at? Well, wrong glasses today, folks. All right, so if you're looking at the healthcare sector, you've got, let me take a look at Abbott Laboratories here. Now, this is a situation, the healthcare sector has obviously done well lately. We can't really seemingly get even past the latest kind of, sell-off, got to find resistance or trace back up into that area, 39.18. A very nice setup here. To ultimately reach below 38.55. But let's take a look at the weekly again. Obviously lower highs. I mean, we kind of had a little bit of a consolidation here, but I don't think this is over on the downside, and I think you could easily get well below 38.55 if you have any type of market turns. But again, market may drift higher here. Might want to wait on some shorting opportunities. This is a setup that I generally like from a short side. We're trading below profiles. I just see this. So if I go here, if I go here and then I go here, boom, there it is. So what does this setup mean? Let's take a look at it. So what this means in general is we've not been acting well. We've kind of been trading below balanced area. We're coming back up into the top of a daily profile that's been regulating that trade down. And, we've already pierced it and kind of done a little key reversal. We're just kind of sitting around that area. This is obviously one to block out on the long side. Could we retrace back up into 137.62? Yes, that's what stops are for. But I think you've got a nice little situation to play defense on. Looking at, wait a minute, where were we at here? Let me get some numbers. You got a decent little trading opportunity, I think, on this one, and a decent risk reward. Got some people Skyping me. Sorry, I cannot control this on this computer. Let's take a look at a couple other setups. Let's kill that. And let's go into, Cigna. We've been looking at this one. This one is not to be on your long lists, guys. This is an ultra short. And I love how it's acting. 130 combined with 128 collection area on the short side. We could fall apart pretty quickly on this one. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Just a little recap here on our last segment today. Thanks for bearing with me. I've got one screen while traveling up in Blowing Rock, North Carolina for the next 2 days, so we'll have a better situation tomorrow up here, technically speaking. Here's the situation on the S&Ps. Having a little bit of a, just kind of rattle around session here this morning. Now 2103.75 is going to be looked at as support on this. That's where you're going to play defense. We've got a pretty good clear-cut situation here when it comes to the breadth, but we're getting a little overextended here on stocks. I'm sorry, that's not the right breadth here. Sorry about that. We're getting a little overextended here, starting to get a little overextended, but nothing to write home about yet as far as stocks trading above profiles relative to stocks trading below profiles. There's only 38 stocks trading below profiles on our intermediate in the S&P right now. Here's the weekly situation. I don't think this is terribly overextended yet. But as we look at the, and nothing really bad on the 60-minute either. So we're just kind of slopping around here, moving north. Nothing really super overextended. But as we look at the number of stocks trading below on our daily, these are the candidates in the S&P that you could kind of take a look at here. Google, Class C, Home Depot. These are first-time breakdowns. Lowe's companies. Let's take a look at this one. This is this really puts some cool stocks on your radar screen, folks. When you're looking at and again, I'm showing our charts in the scanner here. When you're looking at things that haven't been acting well lately, especially even yesterday, you got PFG. God, I hate to say those 3 letters. Sorry, Larry, if you're listening. And for a lot of folks out there who trade futures, God, what a messed up situation that was. CCL, Carnival Corp. This is an ugly scene, and we're headed lower on this one. You know, the market is really, really clarifying who is the, who are the dogs. Analog Devices, ADI. This is a bad situation. We're going to go well below 57 on this one, in my opinion. Stocks that are just not cooperating right now, there's something very, very wrong with them. And if the market does pull back, and you've always got that possibility, even though it looks very bullish right now, a lot of these stocks are going to be great to play defense with on the short side and maybe get, because they probably won't rally. And then you're able to pick up some points if the market does turn around by chance. Let's take a look at this one. Progressive PGR. Yeah, this is nothing, no edge there, so to speak. Just looking for some little cell structures that might be attractive here. It's not a lot of stocks looking too heavy here, guys. I mean, the market is, the internals are cooperating. So we're going to go back to the globe. We're going to take a look at these. We've actually added, we should have the ASX 200 in here now on the heat grid. Tell me that's in there. Where is it? Anyway, we've added the Philippines and the ASX 200 in the scanner. You can access them from the dashboard only right now. So you can go in here to the instrument section. There's the ASX 200. There's Philippines. They should be in the heat grid pretty quickly, and we've also got alerts coming in here soon now. So, guys, stay tuned for Larry. I believe he's next. If he's, I think he's back. So we will pick it back up again tomorrow, guys. Thanks for joining us.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.